Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Day 2 of U.S.-Iran-Israel conflict. S&P 500 is down 110, down 1.6%. The Dow Jones Industrial Average down 855, down 1.75%. NASDAQ's down 395, down 1.7%. The Russell 2000 down 2.7%. Gold is not working. Gold is down 192, down 3.62%, with this dollar getting stronger. Remember, about a year ago, we were saying, looks like the dollar is going to continue to get weaker throughout Trump's term. And that reversed course. It's always those black swan events where you can't, I guess we could predict that Iran was going to flare up again. And it has. But it's tough to define. Bitcoin's down $540, down 0.75%, sitting at 68,833. 10-year Treasury sits at 4.06%. Gold's down 192, down 3.6%. Silver down 6. Wow, silver's down 6%. Copper down 1.6%. And crude oil is the story, obviously. Brent crude up $6, up 7.7% on top of yesterday's 6% gain. Now sits at $84 a barrel. The oil surge was expected. We've seen this before. The gas prices are going to follow. You'll see gas prices probably jump 10 cents today, or by the end of the week, 10 to 30 cents. And in California, that means we're about $5 a gallon again, which, again, acts as a tax. So with higher oil prices, it means higher gas prices. It means higher energy prices. It means higher shipping prices, higher manufacturing prices. The fear is inflation right now. The higher oil cost, $84 plus a barrel. The Middle East energy shock. Californians are paying for a summer blend gasoline to go into effect in the last month. So gasoline prices were already 25 to 30 cents more expensive per gallon. The average price of a gallon of gas in California is $4.66. Look for another 10 to 30 cents per gallon in the short term, in the immediate term. Statewide averages will push above $5 per gallon soon. California's got a really interesting dilemma. In April of 2026, the Valero Benicia refinery is scheduled to shut down, and that accounts for about 12% of the state's gasoline supply. Stocks are under heavy pressure today. Though the S&P 500, NASDAQ, and Dow have rebounded from their session lows. How long the war lasts will be a question that is thrown out there. In theory, we don't know. Semiconductor stocks are sharply lower. There's concerns that the conflict in Iran will lead to inflation. Not a lot of strength in any main sector out there today. Year to date, the S&P Midcap 400 is up 9.1%. The Russell 2000 up 7%. The Dow Jones Industrial Average up 1.8%. The S&P 500 is up 0.5%, so it's now in negative territory. The Nasdaq's down 2.1%. The worries about the Iran conflict lasting longer than expected have fostered a risk-off disposition. Session lows were hit at the open, but it's not panic, although the VIX has spiked. We're not at peak panic. The word on the street is the market is nervous that this conflict with Iran might go on longer. I saw that Saudi Arabia is considering stepping in and throwing some bombs on sites in Iran. You typically don't see that. Foreign markets have gotten a taste of these concerns. Stocks in Europe are down 3 to 4%. Japan's down 3%. South Korea's down 7.2%. Target and Best Buy are both trading higher today following earnings reports that were better than expected. MongoDB, it's down 27% after providing some disappointing first quarter guidance. A big deceleration for its Atlas business. Blackstone saw $1.7 billion in net outflows from its flagship private credit fund. That stock's getting hit a little bit today. So a lot of private credit concerns, oil concerns, inflation concerns, drone warfare with lots of social media coverage. Will it be a winnable war? You see what has happened with Ukraine and Russia, where the drones have changed the rules of engagement. And I think most of us thought Russia and Ukraine would be over and not going into I think it just finished its fourth year. Barclays lifted its price target on Apple to 248 from 239. Analysts tweaked their estimates on the possibility that the September iPhone launch will include foldable and Pro models, with base models pushed to spring 2027. We'll pay attention to Apple, as they just released a low-end phone. Low-end. That's so funny. It's $600. Bernstein hiked its price target on GE Aerospace to 405 from 375, implying roughly a 17% upside from yesterday's close. Analysts really like the sector. Aerospace. High-quality engine business. Aerospace has been a big winner for GE through the centuries, through the decades. Let's talk a little bit about Target. They're up 4%, $118. Sales growth of approximately 2% year on year, ahead of analyst expectations of about 1.7% sales growth. Earnings were solid. The holiday quarter marked Target's fifth quarter in a row where sales have declined year over year, with traffic down for 4 straight quarters. Sales growth turned positive in February, though, which CEO Michael Fidecki called an important milestone on the retailer's path back to growth. They've had some incredible bad luck through the years, and some people would say they've made their own bad luck. They had the get on the correct side of LGBTQ, and then due to pressure from the far right, they backtracked, and that got the liberal community mad at them. So they've had both the liberal community and the conservative communities mad at them. They've had a lot of missteps. They haven't gotten groceries as well as Walmart and Amazon. So in the world of big retail, it's really Costco and Walmart. Then you can try to go for a Target, but it's been pretty lumpy in actual returns. Has a really nice dividend. If that's what you're looking for in a stock, is income in retirement. It might have a little bit of growth and some income. Researchers have used gene editing to create tomatoes that smell like buttered popcorn. Isn't that crazy? By disablling 2 genes that led to the natural accumulation of a compound associated with aroma. The idea here is that such methods could produce better tasting and thus much more marketable tomatoes. Trader Joe's sells us those ketchup chips. I think you will probably see new products in the future based on gene editing. Gig workers who once delivered food are now assisting robots to deliver food. The maintenance, the transporting bots, helping bots out of potholes, completing in-person deliveries that the bots can't. Bot specialist in LA is a job title, and it starts at around $25 an hour. Israel's stock market is betting on a brighter future. Their stock market hit an all-time high yesterday. I found that shocking. Their stock market's up 68% over the last 12 months. Global investors obviously think that the current tensions and escalations and missiles and ultimately could reduce Iran's threats and influence in the region long term. A lot of Israeli companies do defense, energy, and financial works. That's where their sectors are the strongest. A drawn-out conflict or military miscalculation could deflate that narrative. The S&P 500, after major geopolitical events, tends to do well after the Korean War, up 11.2%. Cuban Missile Crisis, up 27%. These are one-year returns. After the 6-Day War, up 13%. The Gulf War, up 10%. 9/11, not so good, down 16%. The Iraq invasion in the early 2000s, up 26%. The Brexit vote, up 19%. So big geopolitical events are pretty positive, historically yielding about up 14.2% when the headlines are the craziest. Veteran economist Ed Yardeni framed recent events as a transition from wartime economy into one of peace. Near-term violence is, in his view, should usher in a more stable and profitable era for the Middle East. Now, A lot of people Khomeini, who died, have lost their leader in Tehran. He was friends with some terrorists. We'll see what comes out of it, but it's not guaranteed to be positive. But what they had wasn't positive. My question of the day is, are people in Cuba getting ready to be invaded? Because it seems like the Trump administration went after Venezuela, ousted Maduro, got rid of Khomeini in Iran. Who's next? I don't think I'm being silly with that throwdown. Crude oil for the year is up 30%, silver's up 28%, gold up 24%. The Magnificent Seven down 6%, the Russell 2000 up 6%. The S&P 500 is basically flat to slightly negative. Got to diversify. We've got an event coming up March 11th, 8 days from now in Lafayette. It's a wealth preservation retirement planning event. I'm going to be with a couple EP CFPs doing an event on the current market conditions and what wealth preservation retirement planning products are you using correctly and which ones you're using wrong, what you don't have exposure to, what you should have exposure to. It's a great event. You can sign up for the 6:30 to 8:30 Wednesday, the 11th in Lafayette, but you do have to sign up at robblackshow.com. That's robblackshow.com.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Markets have been open now for a couple hours. The S&P 500 still down about 1.2%. It's recovered some of the losses. The Dow Jones Industrial Average down 606, down 1.2%. The NASDAQ down 1.3%. Again, recovering some of the losses. Russell 2000 down 2.2%. I think I alluded to this yesterday. You might not have heard that specific show or the line, but I moved some cash yesterday over the weekend on Saturday and Sunday when I saw that this conflict was coming. This is a typical reaction. I'm not happy about it. Higher gas prices, higher energy prices, expectations for higher inflation. I will put some cash to work in the next couple of days, maybe weeks. There will be a little bit of a vibe that has to go into this, in large part, as it always does. Can things get worse? Again, the Wall Street thought today is we didn't really think Ukraine and Russia was going to drag on for as many years as it has. What is the United States committed to? Now, again, we're going in all parts of that country, Iran, and blowing things up. What are we committed to? And will there need to be troops on the ground? I hope not. I expect not. But I've been in this business long enough that you can't really say with 100% certainty, can you? So gold is coming back down today on a stronger dollar. Paramount's debt has been downgraded to junk following the Warner Brothers purchase deal. That's ouchy. It's going to be interesting to watch to see how Paramount, Skydance, and Warner Brothers operate in the next 5 years, as this deal was super expensive. I would expect massive layoffs, large layoffs. Let's not say massive. I just got off a news segment where James, the anchor, was a little bit down. He was completely down, in my opinion, on the thought of the markets going down and Iran and the war. That vibe is what a lot of people are feeling right now. I ended the segment by saying, it'll be okay. It may take a month. It may take 2 months. But the recovery after a geopolitical event historically has been pretty good for U.S. investors. Now, again, the problem there is no guarantee, is there? And if we could have that guarantee, would we want it? So after a major geopolitical event, markets 1 year later tend to be up about 14.2%. And if we're able to replace the leader in Iran, who was anti-West, anti-US, anti-Israel, if we're able to get a business economy going in there, Iran could be very important to the world markets. It is a very oil-rich country that produces a lot of wealth. BTIG's Jonathan Krinsky said the market is at a very tricky spot. While today's weakness is certainly more than expected, they're seeing the VIX curve invert by 3 to 4 points, which is often a sign that fears finally arrived. On the energy front, while crude is up 8%, energy stocks were unable to take out yesterday's highs and are largely red today. This often suggests the commodity is on its last legs. On the other hand, we're seeing semiconductors finally break down, particularly in the memory space, which is a group that continues to see meaningful downside risk because of how much they've gone up in the last 18 months. And then you saw Korea. You can go take a look at the Korea stock market, EWY. And that's a market that likely won't be able to overcome a breakdown in semiconductors as they're the largest industry group in the Korean markets. The S&P 500 has lost initial support of 6,800, which opens the door to 6,530 to 6,570 range, if you're wondering how low we can go, according to BTIG's Jonathan Krinsky. So I'll pay attention to that number. Their research is expensive, and it's good stuff. Now, Krinsky ends his note with, we don't think we need to get down there, but if we do, we suspect that support holds. Again, 6530 to 6570 range. Pinterest is having some nice gains today on the background of news that Elliott is taking a position and forcing the company to do an aggressive stock buyback. Management at Pinterest cited U.S. tariffs prompting large retail advertisers to pull back spending, alongside a revenue mix towards faster growing but under-monetized international markets. Elliott Management comes in and says, look, we've taken shares of the company and we want you to shake things up. The stock is down 50% year over year, trading near multi-year lows, following a disappointing fourth quarter earnings on a report on February 12th that had missed revenue expectations and issued downside guidance. The $1 billion infusion signals strong confidence in Pinterest user growth and AI-enhanced platform, potentially funding product innovation, U.S. ad recovery efforts, and accelerate monetization of global users. An aggressive buyback, AI integration, Elliott Management taking a activist shareholder stake. Is it something you're interested in? Target's up 5% today. It continues to hold up well following earnings this morning, despite the down day in the market. Trump had a CNBC White House interview. It's interesting that CNBC gets the love that it does as a news station. But Trump says today on the station that he, based on how negotiations were growing, he thought they were just going to attack first. His quote was, worst case is the U.S. hits Iran and someone takes over who's just as bad as the previous person. Iran is hitting only civilian places like hotels. A lot of people in Iran are asking for immunity. Israel didn't force his hand to launch strikes against Iran. He might have forced theirs. Trump says that the relationship with Venezuela has been great, very seamless. Some European nations have been helpful, some haven't. The U.S. will cut off all trade with Spain. Doesn't want anything to do with Spain. Where did that twist come from? Let's talk a little bit about MongoDB. They delivered a fundamentally strong quarter, highlighted durable revenue growth, expanding margins, and accelerating large deal momentum. However, with Atlas representing the core long-term thesis, even a slight deceleration. Regarding the bundling nuances, is triggering outsized stock pressure on the company today. Longer term, the secular tailwinds remain intact: cloud migration, database modernization, multi-cloud strategies, and the emergence of generative AI applications continue to favor flexible, scalable data platforms. But the near-term growth moderation and leadership changes are clouding sentiment. MongoDB remains well-positioned to capitalize on AI and cloud-driven demand over time. Best Buy is up 4.7%, becoming the top-performing stock in the S&P 500 today. I don't get into Best Buy as often as I used to. I don't know if that's a trend. I don't know if it's a good thing. I don't know. Maybe it's just as I'm getting older, I feel saturated with everything that I need to do, electronically speaking. Doesn't roll right off the tongue, but you get the idea where I'm going at with that. Alphabet is introducing Gemini 3.1 Lite. There's so many models that AI companies are putting together, and we don't know. It's going to be tough to see which ones are marketed to us well and which ones we accept. I'll tell you, OpenAI has really taken a hit to the point that it's turned into a dinner table conversation of, can you guys not use ChatGPT? Because they stepped in, OpenAI did, and when Anthropic said, we don't want the U.S. government to militarize our technology, we're uncomfortable with that as a company. The United States punished them, and OpenAI said, we'll do it. OpenAI almost has to right now. They've got so much bad PR and a pending IPO coming. They need to make revenue. They need to show it. So I get it. But in California, if you're not from here while you're listening to this, Google and OpenAI offices, you just see employees really distraught about working for companies that are playing into war as an opportunity. Let's talk a little bit more about Target's numbers. Investors appear pleased with the strong earnings per share upside and better than feared full-year guidance. The outlook comps to return to growth in 2027, even if modestly, is being viewed constructively. Given Walmart's recent downside earnings per share guidance for the first quarter and for the full year, Target's outlook compares favorably and seems to be contributing to today's relative strength. Target delivered an encouraging quarter highlighted by a sizable earnings per share beat and stable margins despite ongoing top-line pressure. This report that they came out with this morning likely clears a very low bar for the company and supports the stock's positive reaction. Target used to be an interesting company in that, and bear with me a second, when the 1990s were playing out, Target would hire high-end designers. And they've done this even like with a Taylor Swift collection, where they get really interesting looking clothes that cost a little bit more than, say, Walmart's, that are designed a little bit better. And it feels to me like they've lost their way with some of the fashion choices, and their food just isn't catching up as fast as Walmart is innovating. Blackstone put their COO, Jonathan Gray, on CNBC this morning because the stock is down $8, sitting at $106. Trying to talk up the private credit. 400 borrowers had 10% earnings before interest, tax, depreciation, amortization growth last year. The company had $2 billion in new inflows. There's been a ton of noise in the press. It's been a constant spin cycle. It is not surprising investors will get nervous when those conditions are out there. Institutional clients are allocating significant amounts to private credit. Iran attacks do not impact the long-term strategy. The U.S. has a strong economy and inflation is falling. The measure of success is not quarterly flows, it's performance. There could be a pivot towards hard assets, which is, I think it's fascinating that it's gotten this far. And what happened was Blackstone had to file an SEC filing, and in it, they talked about redemptions in the first quarter. And when Wall Street read that quarterly filing, which you should read your quarterly filings and your S filings, as well as read the 10Ks, if you're going to own individual stocks. I do. I don't find it's got a lot of legal boilerplate. So you really have to filter what you're consuming. I think coming back into a weird little circle every now and then, as the show does. 3 hours ago, Israel bombed a council choosing Iran's next supreme leader. There's a lot of questions. The Israeli Air Force struck the building housing Iran's Council of Experts in the holy city of Qom. in an attempt to disrupt the process of appointing a new supreme leader. The Council of Experts is the body within the Iranian regime with the authority to appoint a new supreme leader. The clerics on the council vote on a short list of candidates being drafted by a smaller secret committee. There's a lot of questions, and I've got a son who asks me questions every day at dinner or post-dinner about what's going on in the current market and why. And he has a lot of questions, and he's learning a lot from Dad. And it is interesting to watch from a distance, is what I'll tell you. Being a dad is mostly a blessing. So let's talk about those memory stocks that are falling apart. Micron is down 7%. SanDisk down 5.7%. Western Digital down 5.9%. Seagate is down 4.9%. U.S. memory stocks are melting down after South Korean bellwethers plummeted. South Korean markets were closed for a holiday on Monday. So this marked the first time today that traders were able to react to the U.S. and Israeli strikes against Iran, which brings with it the threat of a prolonged disruption to the energy markets. The Kospi is the market, and it had a pretty big drop. So foreign investors are leading the rout, pulling roughly $3.7 billion from the Kospi. Sounds like not a lot of money, but it is on their market. SK Hynix and Samsung, whose humongous gains in 2026 pushed them to account for roughly 40% of the benchmark gauge. There may be some industry-specific chatter accentuating the losses, but at its core, this is just a parabolic trend breaking in the face of an unexpected negative news. The stocks that I mentioned have all been huge winners, and the S&P 500 has the Magnificent Seven, which are market-weighted, and when they go down, the market goes down, and it's a problem. Now we're learning that South Korea's got 40% of their stock market is made up of two stocks because of the huge run-up that SK Hynix and Samsung have had. Their shares tumbled 11.5% and 9.9%, so it's not awkward to say Micron, SanDisk, Western Digital, and Seagate followed in that path. Versant Media. I know you're saying, who the heck is Versant Media? It's the cable TV assets of CNBC, MS Now, and the Golf Channel. They reported its first earnings since spinning off from Comcast. That stock is up about 3%. Ticker symbol is VSNT. I've done no work on Versant. But they reported revenue of $1.55 billion, shy of expectations of $1.56 billion. Company posted earnings of 72 cents a share, well below expectations of 96 cents per share. MS Now, formerly MSNBC, was the most watched news channel on election night in November, Versant said. The network will launch a direct-to-consumer platform later this year. I don't know. This brings up an interesting question. Me and a friend recently argued about our news sources. And he was trying to pick a fight, like, oh, you're a liberal or you're a conservative. And he was angling towards, what news do you watch? And I said, I don't really watch a lot of news, which is mostly true. And then I thought about it. I said, I watch a lot of Bloomberg television. I watch a lot of BBC. I read probably more of my news than expected from the Financial Times, the Wall Street Journal, Barron's, which you are going to see biases for sure. But I do a lot of it's interesting for me to try to explain that Bloomberg television, I don't think is as biased. Like, my bias isn't Republican or Democrat. It seems to be financial. Worthy of noting, right? OpenAI, this is lovely. I said something yesterday that was funny, and I got a response on it. I thought Mark Zuckerberg, he's just not very photogenic. And OpenAI's got a problem of their own, where they have a CEO who, he's not really connected with you and me, the average people. OpenAI CEO Sam Altman shared an internal memo in which he expressed some regrets for the bad optics of his company's hasty deal with the Pentagon. He outlined new additions that were made to the agreement. So he's having to apologize. The new conditions centered around the mass surveillance of Americans, one of the key issues that blew up Anthropic's deal with the Pentagon. Altman said they added language to clarify in accordance with the Fourth Amendment and laws already on the books, the AI system shall not be intentionally used for domestic surveillance of U.S. persons and nationals. Very, very awkward. And he sells it very awkwardly. The vast majority of Tesla robotaxis in Austin still have a safety driver. In January, Tesla announced its robotaxis would begin operating without safety monitors. We're in March now. CEO Elon Musk announced that Austin robotaxis were beginning to operate without safety monitors in the front seats. The stock jumped. At the time, observers estimated that just 2 of the roughly 45 robotaxis in the fleet were without monitors, but they did have monitors driving immediately behind the Tesla. Tesla said back in January that the ratio would increase quickly. We obviously are being very cautious about this because we want to have no injuries or serious accidents. The number of accidents being reported by Tesla robotaxis is higher than human drivers right now. Data from Robotaxi Tracker has identified 8 unsupervised Tesla robotaxis, but only 1 has been spotted in the last week. The rest were last seen roughly 3 weeks ago. It's a funny way, the way Wall Street works now, that press releases move stocks. You have to be very careful on that. Apple updated their Mac chips and amps up the AI claims. Apple's new M5 Pro and M5 Max chips are the latest step in steady silicon march, faster CPUs, stronger graphics, and more memory bandwidth. The 30% CPU performance is meaningful, but not revolutionary. So Apple makes their own silicon, and it's meant for their products. It was a really smart solution idea that they put into place 10 plus years ago. Now, Apple, again, talking about PR, they're framing these chips as being framed around the AI, artificial intelligence. Companies touting they do up to 4 times higher peak GPU compute for AI workloads and the ability to run larger models locally, leaning hard into the on-device AI narrative as it positions the MacBook Pro as a more capable personal AI development machine. The explosion of interest in roll your own AI agents like Moltbot have made low-cost Macs like the Mac Mini a very hot item. Investors are now learning a painful lesson that buying a dip driven by geopolitics is not a slam dunk. Yesterday, the markets opened down big. They recovered some of those losses. Today, they opened down big. They recovered some of those losses. But we're not going to hit all-time highs right now. We're going to see how gasoline prices shake out, oil prices shake out, how long this goes, how many Americans come home dead, what the stories are coming out of Trump's cabinet. Where does this lead us to with Cuba? Where does this lead us to with the Republican primaries that have just started up? And what the government looks like come November after the midterm election, which is, as of now, likely to produce a divided government, which in the past has been really good for Wall Street. A little less spending gets done when there's gridlock. At this point in time, I think I would be favoring gridlock if you were to ask me like a political question. I don't think either party has the ability to lower our national deficit. I don't think it's going to happen in my lifetime. I think I'll be long dead. I think it'll turn into a problem for my children or my children's children, as that can has got kicked down the road, and it's benefited me. 2 interesting things have happened recently. One was my kid admitted to me that he wanted me to have a nicer car because other kids in his school have nicer cars that they're getting dropped off on. And I had to have the conversation that my family, my father, his top earning year was $60,000 on the last year that he worked. He was in the United States Army, so he had good housing and good health care in theory. Although I question what gave him cancer. I'm thinking it probably came from Vietnam in his first or second tour. But I had to have a conversation with my kid about how I'm not a flashy spender. I'm more of a saver. And there's enough money there that we should be more spending. And I have in the last year spent more than ever before. And I'm starting to open up some habits that I couldn't do in my earlier days. So that was one conversation. Another one, obviously, the markets are now down 2 days in a row. And that's not new. It's just new because it's the first time he's ever been paying attention with the stock market and a war at the same time. So I have to remind him, like, here's 10 things. Here's 10 rules. And I'll tell him, he goes to a Catholic school. He's not a practicing Catholic, but it's a good football school. It's a great football school. And he's a big boy. And I said, you've learned a little bit about the 10 Commandments, right? I'm like, you have to have commandments. And here's mine. And it's a top 10 list. Number one is you always spend less than you earn. Always. Every other financial strategy collapses if that one fails. A consistent surplus is what funds investing. It funds emergencies, long-term freedom. People who master this rule rarely end up in a crisis. My second commandment is save at least 20% of your take-home pay. I've been doing this for 30 years, and I have more money than I ever dreamt of. Back when I was 18, I have more money than I ever dreamt of when I was 30. That tells you it's not a new concept to me. It's continuing to be a new concept. So saving 20% of my take-home pay helped, 10% towards long-term investing, 10% towards short-term savings and safety buffers. And once you get those short-term savings and safety buffers in, which I told you earlier in the show, I've moved some cash into a brokerage account. If income is tight, start smaller, move upward relentlessly in your savings. 20%. That's why I got wealthy. Keep 3-6 months of expenses in an emergency fund. I no longer have that emergency fund need. But in my 20s and 30s, if I lost my job, it would have taken me a while to either re-educate myself or to get into another career and get relationships going. Typically 3 months if you're good at it, 6 months if you're not, is your emergency expense. The goal isn't getting great returns on the third rule. The goal is to survive without debt. Fourth rule is never carry high interest debt. So I have credit cards, and I use credit cards because they're rewards that literally generate thousands and thousands of dollars of rewards for me. Like I have a Verizon card that I get 4% off on my groceries, 4% off on my gasoline, 4% off on restaurants. And all that 4% goes to paying for my cell phone bill. And when it doesn't, when other credit card rewards don't pay off the cell phone bill, for instance, it goes towards my savings or my investments. So never carry high interest credit card debt. Payday loans are awful. They destroy your financial progress. My fifth rule to live by is invest early, automatically, and consistently. If you have a 401k, your 403b or 457, that's a great start. A Roth or traditional IRA, start with low-cost index funds. I have some. I'm not all in tech. No way. I've got some income funds too, income stocks as well. But you got to get those brokerage accounts going, the 401k, the 403b, the 457, the Roth or the traditional IRA. You got to get it going. The sooner you start and it's there. For instance, my son coaches football now to first graders and second graders. It's pretty cool. He makes roughly $45, $50 a weekend. And what is good about that is I'm going to open a Roth IRA for him this year. And all the money that he earned, I'm going to match it and put it in and show him, like, look, you now have this account. And whenever you have income, you could fund it. And I'll make a rule with him as he goes off to college and starts a career. I'll help match anything that he puts in. I want to encourage that pattern. So I live on last month's income. That's rule number 6. I'm never paycheck to paycheck. And that forces me to keep lifestyle creep in check. I did it in my 20s and it was a good habit. Things are expensive in the world and insurance is important. I have health insurance in case I lose my health. I've got auto insurance in case I get into a car crash and take someone's Lamborghini out. Or don't hit a Tesla. $100,000 Tesla, it's basically destroyed if you hit rear-ended and cause one of those panels to slip a bit. That's why they're so expensive to insure. So I have health insurance to cover my health. I got auto insurance to cover my car in case I hit a car full of lawyers. I've got homeowners insurance. I have disability insurance. It's often overlooked, but it's critical. And I have term life insurance that ends when I turn 60. I got it in my 30s with the idea that this career is kicking out income to me that's important to my family. If I died in my 30s or 40s or 50s, it would be a devastation to my family to lose that income. So I got 10 times my income. And then I added to that policy as I had kids, about $500,000 each. So ultimately I got like $4 million of term life. And when it's over at 60, I hope I don't use it. I'll be dead. Do you see where I'm going at with that? But it would have done its job. And now I have enough wealth. If I die at 60, 61, 62, 63, it's okay. I track my net worth monthly. I track my spending monthly. I track my savings rates monthly. I look at my debt balances monthly on my mortgages. And I keep track of my investment contributions. Why? It's pretty obvious because like one time in my early 30s, we changed payroll providers. And when we changed payroll providers, my 401k, they stopped taking money out and I was too busy to notice. I'm mad about that. And when I did notice, I'm like, no, I haven't been contributing my 401k in the last 2 years. 16 months, but you get the idea. My number nine on my top 10 rules that I have been telling my kid about is avoid lifestyle inflation. So I didn't get a nice car. I always had good cars. I probably won't get like a Lamborghini. Probably my last car will probably be something like a BMW. I'm trying to wait till they get a little bit more automated in the driving technology. I will have one nice car, one last one that I'm an old guy who appreciates it. My future self has benefited from me not getting that lifestyle inflation. And finally, the last piece of advice I gave him was, and this is, I think, a good one, is make big decisions slowly and make small decisions quickly. Most financial damage comes from rushed major choices like buying a home, taking on a car loan, getting a divorce. I think marrying well or wisely is a good idea. I waited till my 30s. If I got married in my 20s, I definitely would have divorced quickly. As it turns out, I do have a divorce. And we weren't together even a year. So I tell him that. And I said, that could have been a lot worse. I caught her in a bad situation, so she went quietly. And I'm okay with that. It's a weird moral thing to say to your kid, but she definitely didn't deserve half of what I had in under a year. So buying a home's important. Car loans are, you can get into a $60,000 car when you only need a $20,000 car. I tell him I think some of the sexiest women in my 20s were women who had cars paid off. He laughs at me. Best thing I ever did for myself was starting a business. Partnered with CFP Chad Burton, and it was a brilliant idea, and it changed my life for the positive. Small daily choices matter, but big ones define your trajectory. Anyhow, I'm going to take a break here. I do have an event coming up. It's a wealth preservation retirement planning event. March 11th, Wednesday, 6:30 to 8:30 in Lafayette with CFP. Stephanie Richman will be there. I'll be there. We'll talk about current market conditions, what you should be doing, hedging your positions, how much wealth is enough wealth, how to manage it until the day you die, decisions you're doing right, decisions you're doing wrong. Plus, you'll get a preliminary plan after the event with a CFP where they'll spend a few hours, 3 to 5 hours, gathering your information, putting the information in, and telling you how it looks for you and what you might be missing. Sign up for the event at robblackshow.com. That's robblackshow.com. It's 8 days from now.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.